Welcome to the Fractional Billionaire Project Part 2. Those of you who watched Part 1 would remember that the website where you can get more information is www.privateequitysolution.com, and that will be this website, privateequitysolution.com. And if you have any questions, you can send it to any of these email addresses: fractionalbillionaire@privateequitysolution.com or fracbill@privateequitysolution.com. And there was a resource that you were referred to at the time. It's a YouTube video, how to join the Fractional Billionaire Project. In case you've not watched it, you can check our YouTube channel named MCWS Presentations. Now, the other thing that should have been mentioned is that you can read more about the cooperative that is the basis for this Fractional Billionaire Project by going on the website, privateequitysolution.com. If you go to the link that says support, and let's click on support and see. Okay. We don't have it here. So you need to go to the link that says 5P5C, which is just another name for the Fractional Billionaire Project, $5 plus 5 campaign. But if you go to these bullet points 1 and 2, bullet point 1, it says make a suggested minimum $5 jumpstart contribution in support of the MOPEC effort. So MOPEC is the member-owned private equity cooperative, and that MOPEC there is a hyperlink. So if you click on it, it would open the flyer. So for those who want to join through the regular offer available, it will cost $70 to get in. But the reason why this is even being brought up now is to give you an opportunity to go there and read through the flyer, see the basis for what MOPEC is about, how, it's not a pyramid network marketing or multi-level sales scheme. It's not a franchise arrangement. It's not some top-down corporate sales effort. It's a bottom-up, people organized and people governed solution, organized by everyday people for the benefit of everyday people and governed by everyday people. And it is also the non-billionaires' opportunity to get the financial and tax benefits currently reserved for billionaires. And it talks about a lot of myths, like we all think we live in the same world, but in realities, there are two distinct and separate worlds, or systems, or rules, or laws available. There's a world of billionaires and the world of everyone else. And so if you have time, you can read through that flyer. It would certainly help you to get a feel for what MOPEC is all about and why it is very important that you get on board, and where possible, when possible, you want to get your children, your siblings, your friends, your neighbors, your co-workers involved as well. Anyway, let's go back to the presentation itself. So we've worked off of this document in part 1. So ground rules and the questionnaire, we've gone through all that in part 1. So in this part 2, we'll work off of these slides, and you can see there are 5P5C, which was the original name as initially conceived. $5 plus 5, meaning you contribute $5, you make something called a jumpstart contribution of $5 and get 5 other people to do the same. And that was supposed to create some momentum to get this going, but it's been tweaked a little, and now you can just make a jumpstart contribution of $21 and you can just get your membership at a discounted price. But nothing stops you also from doing only $5. It just means that you're not going to get a membership in exchange for that. But there are some benefits you get. If you go to that 5P, 5C page, you'd see. So this 5P, 5C or $5 plus 5 campaign is the same thing we call the Fractional Billionaire Project or the Virtual Billionaire Project. It simply means, let's start with the question. What is a billion? A billion is 1,000 million. So a billion can either be one person who has a net worth of 1 billion, that's a billionaire, or theoretically, 1 million people who each have a net worth of $1,000 each. If they work together as a unit, they constitute what we can call a virtual billionaire. So really, this effort is first and foremost about organizing everyday people into a cohesive unit where they work together so that they can get benefits currently reserved for billionaires. Now, it won't make any of them billionaires, but it's going to take them way beyond their friends and neighbors and co-workers who are not in any such organized entity. So that's the idea of the Fractional Billionaire Project. That's what makes it different from a multi-level scheme or multi-level marketing or pyramid marketing scheme. Because in those arrangements, you are recruiting people, getting those you recruit to recruit other people, and so on. But no, that's not what this is about. This is about organizing a certain critical mass of people who may each on their own be worth only 1,000, 10,000, 100,000, 50,000, 200,000. But when they work together as a unit, they are then worth billions, and they can get benefits reserved for billionaires, of which there are many. And so that's what we want to quickly look through on these slides. So I'm just trying to, let me go to full screen. Okay. So we've looked at that. So yeah, the first slide says, why billionaire? What is the advantage? Why don't I just hold on to my 10,000 or my 5,000 or my 100,000 or 200,000 of net worth and use the options available to me like any other person I know? Well, billionaires are organized, everyone else, and we're talking more than 99.5% of the population is disorganized. So this is not talking about how organized you are personally. No, it's talking about how you can come together to get your interests taken care of. So for example, billionaires constitute less than 0.001% of the population. But you wouldn't know it when you look at the laws, the tax laws, the laws that govern business, and so on. You would think everybody is a billionaire. They are, because they control the system, because they are organized. So the results they get are not related to their numbers. And that's because they are organized. The other thing is that they know things that this other 99.5% don't know. Most people may find that difficult to believe, but if I go back to the other slide that we used in part one, we refer to something that William Shakespeare said many years ago. He said, a fool thinks himself to be wise, but a wise man knows himself to be a fool. So let's just leave it at that. So maybe the first thing is to at least recognize what you don't know. Then you can move from there. And because they know things that you don't, they do things differently. For example, they let others do the work, but they keep the profits. They let others take the risk, but they keep the profits. And you don't have to just take my word for it. There was this report that came out back in 2012, and actually these same people print reports every year, but the one of 2012 was quite interesting because, and this is from Reuters. Billionaires get richer, many millionaires lose ground. So if you have time, you can go look it up and read it to get some context. So that's one example. And then another document we could look at very quickly is a document that says how the stinking rich got there. And I'm looking to see whether I can find, yeah. Okay, no. How the stinking rich ate the economy. So this was from the Atlantic back in, when was this? 2011, 2012. And they talk about how, the top 0.1%, which would be everybody making at least $1.7 million in the US, within the time frame of what they call the Great Divergence, which I think they're looking at the period between 1980 and 2007, if I'm not mistaken. So the top 0.1%, they triple their share of national income to 10%. The top 0.01%, they quadruple their share. The top 1%, those manage to just double their share. And the top 5%, they didn't even get up to double, maybe more like a little bit over 1.5. So you can go read that article, but this is the kicker. So notice a pattern. The richer you are, the faster you expand your slice of your country's income. So again, there's not enough time to go into all the details of that document, but you can go look at it and you can make your own conclusions from there. So anyway, the bottom line then here is that the world of billionaires is different from yours, and they want no part of your world, because in your world, no work means no pay. And even when you work, you pay high taxes. Inflation is your enemy. And really, most people are just wage slaves, in terms of they have to work for a wage, otherwise they will not be able to pay their bills. And they're also tax slaves, because the richest are not going to pay any tax. These people who are working not only have to pay their own taxes on their income, they also have to pay for the billionaires who won't pay. So the two things about the world of billionaires is that they want no part of your own world, and they don't want you in their world. Why don't they want you? Because they realize that the game they are playing only works if a few people take advantage. If everybody figures out what they are doing and begins to do it, there will be nobody to take advantage of. So that's the reason why you want to be interested in what they do and also begin to do what they do, not what they tell you to do. So when you go to your bank or your financial planner, all the options they are giving you, those are the options set up for you by the billionaires, because all those options involve them taking money from you. You want to actually be the one setting up options for others so that you can take from others. So it's as simple as that. Let's go to the next slide. What's in it for you? Well, we have to reload this file. So the benefits of the Fractional Billionaire project, the benefits of knowing the things that billionaires know that others don't, and doing what billionaires do that most people are not doing, is that you let others do the work. You let others pay your mortgage, your student loans, your car loans, your credit card bills, and so on. You let others pay your taxes, and you transition from being a worker to a capitalist. So, and there are other things that we cannot begin to list out here, but let's quickly look at what Warren Buffett said in an interview that he had with Charlie Rose back in, I believe it was 2011. But let's see. So we're looking at the transcript of, and this is from the CNBC website, I would think, going by the logo, but it opens with, okay, yeah. Warren Buffett spoke with broadcast journalist Charlie Rose for 1 hour on his PBS and Bloomberg television interview program that aired on Monday, August 15, 2011. So we're just going to go directly to some highlighted portions. So this is Buffett saying the IRS publishes statistics. They've done that since 1992 about the top 400 earners in the country, what they publish, and it's not the same people on the list every year. But those earners have had their income since 1992 quintupled. It's gone up by 5 times. Now, I don't know very many of our listeners that have had their earnings quintupled. Next, it talks about, just focus on the highlights. So, what really gives the low rates to the very rich like me, this is Warren Buffett, a billionaire talking about himself, is the low tax on dividends and capital gains. If you take these rich people that the IRS singles out from 92, they've almost had a tenfold increase in capital gains. They've had a tenfold increase almost in dividends. Those are taxed at 15%, and there is no payroll tax. By payroll tax, he's talking about social security taxes or Medicare taxes. In Canada, those will be CPP and EI taxes. Those are your payroll taxes on earned income or T4 income. Now, the payroll tax accounts for almost as much revenue to the US government as the income tax. It's close to 800 billion plus on payroll taxes and 900 billion on income taxes for the US government in the year 2010. It was talking about. And then this is the area I want you to focus on. If you make money with money, which makes you a capitalist, you are working off of your capital, not off of your labor. You get taxed at very low rates, 15% at the time, on dividends and capital gains. No payroll tax. Now, if you make money with muscle or hard work or sweat of your brow, you get taxed at rates that move on up. And most of the people, the middle class, gets taxed at rates of either 15% or 25% on their federal income tax in the US. But then they get really hit hard on the payroll tax. So when we talk about transitioning from worker to capitalist, we're talking about moving from someone who makes money from your labor, from your brain, from your muscle, from the sweat of your brow, to someone who makes money with money. And one other reason why that bit is important is what Paul Krugman had to say about that. And let me see whether I can find that document. I'm not too sure that I can find it, but let's see. This is Paul Krugman. He's a lecturer, or at least at the time, he was a lecturer at Princeton. He's a Nobel Prize winner for his work in economic research. He wrote this article and he was talking about how most jobs are going to be lost to robots and all that. But he did mention that we cannot get to where we want to go by giving workers college degrees, which may be no more than tickets to jobs that don't exist or don't pay good wages. But I guess this is not the particular document he wrote that I'm looking for. But I'm not able to find it in a hurry. So I guess I have to leave it. But the statement he made is that we are moving into a future where capital would matter more than education. In other words, how much money you have as capital with which you can make money would matter more than how much education you have and how many certificates or degrees or years of experience you have, simply because things have changed and things continue to change. I really wish I could find, okay, yeah, there it is. Robots and Robber Barons, I think was the name of the article. So let's look for that just phrase or sentence. Yeah. So he said, we are moving back to a world in which financial capital, not skill or education, determines income. That can be expanded on in other presentations after this one, but enough of that. So, and what is at stake? Why do you want to hedge your bets by joining this fractional billionaire project? Because the billionaires are no longer happy to just stay with the profits that with what used to be their profits. Now they want your job, because if they can take your job and reconfigure it either by getting someone younger or someone with fewer skills or someone else to do your job for less pay, or better still, if they can get an algorithm or a robot to do your job, then what used to be your salary and benefits, the costs associated with that, now become a part of their profit. Again, don't take my word for it. I'm not the only one saying this. Look at this report that came from JP Morgan Chase, a leading diversified US banking group. They mentioned that, and this was a document they called Eye on the Market, July 11, 2011. They mentioned that for large corporations, their profit margins have reached levels not seen in decades. So you can see their pre-tax margins, which had come down from 14% to as low as 7% in 1990, are going back up again and reaching 12, 13%, so it's going up. And they said reductions in wages and benefits explain the majority of the net improvement in profit margins. This trend has continued, as we have shown several times over the last 2 years. US labor compensation is now at a 50-year low, and pre-tax margins are also going the other way, almost at a 50-year high, relative to both company sales and the US gross domestic product. So you can see the total increase in pre-tax margins here, and you can see how much of it can be explained by a reduction in wages and benefits. So that will show you how they're every day reorganizing things, reducing jobs or reducing wages and benefits in one way or the other. So, for example, recently, some shareholders of Warren Buffett took him to task about this trend and his involvement in it, because some of those shareholders saw Warren Buffett as a compassionate capitalist, and they were shocked. So this is from the New York Times, and this was as recently as May 4, 2015. So Berkshire's Warren Buffett shows his teddy bear image has tough side. So it says, I don't know of any company that has a policy that says we are going to have a lot more people than we need. This is Warren Buffett speaking, because one shareholder had expressed concern that this Brazilian company called 3G, was buying up companies with the help of Warren Buffett. And this company has something called a zero-based budgeting approach, which looks at every cost as something to consider cutting. That means employees, offices, everything. It's always on the table every year. So every year they ask questions and say, we have 2,000 employees. Do we really need 2,000 employees? Can we get this done with 1,500? Or can we even use the same 2,000 employees but pay them lower? Can we fire some and then rehire other people? And because the market is soft, there are more workers looking for jobs than there are good jobs. They can get away with that. So some shareholders are questioning Buffett. And this is Buffett responding, saying, we do have some businesses where we probably have more people than we need. And I don't do anything about it, but that doesn't mean that I endorse it. I basically tolerate it. And then he said again, efficiency is required over time in capitalism. So you can go read the article to get some idea of what people think. Something else also came up a while back in the Atlantic, where someone was saying that US workers need to take a pay cut. So I think this was on page 8, if I'm not mistaken. Oh, okay. Okay. There it is. The good news and also the bad news for America is that the nation's own super elite is rapidly adjusting to this more global perspective. The US-based CEO of one of the world's largest hedge funds told me that his firm's investment committee often discusses the question of who wins and who loses in today's economy. In a recent internal debate, he said one of his senior colleagues had argued that the hollowing out of the American middle class did not really matter. His point was that if the transformation of the world economy lifts 4 people in China and India out of poverty and into the middle class, and meanwhile means 1 American drops out of the middle class, that's not such a bad trade, the CEO recalled. I heard a similar sentiment from the Taiwanese-born 30-something CFO of a US internet company. A gentle, unpretentious man who went from public school to Harvard. He's nonetheless not terribly sympathetic to the complaints of the American middle class. We demand a higher paycheck than the rest of the world, he told me. So if you're going to demand 10 times the paycheck, you need to deliver 10 times the value. It sounds harsh, but maybe people in the middle class need to decide to take a pay cut. So that article itself was titled The Rise of the New Global Elites. If you have time, you should read it. It was written by Chrystia Freeland. At the time, she was working, I think, with Reuters, if I'm not mistaken, and then she since left and she has become a member of parliament in the Canadian parliament. So they want your job and they want you to work more and get paid less. So that's what we just talked about in that article we read. Now, if you're a small business person, they want your profits. So, and how do they do that? They do that by killing the competition. So there was this article that came out in Harper's Magazine a while back titled Killing the Competition. So it was written by Barry C. Lynn. This was January 2012. And it was talking about how in sector after sector of our political economy, there are still many sellers, many of us, small business people, professional practice workers, lawyers, doctors, dentists, and so on. But every day there are fewer buyers, fewer of them. Hence, they enjoy more and more liberty to dictate terms or simply to dictate. Now, I don't have enough time in this presentation to go through many of the things he said. In other presentations, I'll get to that. But let's see how this works in practice. This idea of dictating, how it translates into profits for the billionaires and losses for small business people. Let's see. This is an article from the Globe and Mail, December 2014. talks about Loblaws, a giant grocery store chain in Canada. The owners are billionaires. In a memo issued to some of its suppliers last year, Loblaws company set out an extensive set of rules. Remember that person talking about dictate terms concerning pricing and competitive practices. Among the many policies in the memo, the retailer said that if a rival retailer touted the vendor's products at a lower price, Loblaw would offer its customers the same price markdown and expect the vendor to pay the cost difference. They don't care. You know, all they're saying is, if Walmart is selling that same product for $2 and we are selling it for $2.50, we will just simply price it at $2.50 and we'll charge you, the supplier, for the other 50 cents. Talk about dictating terms. In its most recent memo in June, also obtained by the Globe, it said it would not accept price increases from Loblaw suppliers across the board for the rest of 2014 and 2015, with some exceptions. So they are saying again, we don't care whether your costs increase. The Canadian dollar may lose value relative to US dollars. Imports may become more expensive. We don't care. We will not allow you to increase prices, so you eat the loss. It says cost changes will be conditional on Loblaw being able to remain profitable and competitive in the marketplace, it said. After 4 weeks, if Loblaw is not able to remain profitable and competitive, we will return to the pre-increase cost level and bill back an amount equal to the price increases. So that's an example of they want your profit. And they are doing this on two levels, by killing the competition and taking advantage of that to increase their own profit margins. So the same Loblaw that is telling its vendors that they will not accept price increases, they will bill back any differences to them. Here it says strong sales and the acquisition of Shoppers Drug Mart helped Loblaw companies more than double its profit in the fourth quarter. By acquiring Shoppers Drug Mart, what they've done is laid off some staff, because Shoppers Drug Mart was another large chain. So they'll say, we don't need two departments for human resources or accounting or purchasing. And so thousands got laid off, but the company has doubled its profit. The billionaire owners are richer. And also the suppliers who are being squeezed have given up some of their profit to make sure that these people have doubled their profit. This is the world in which we live now. So there used to be some protections in the law in times past, but gradually the billionaire class have weakened all those protections to favor them, and it allows them to take a lot from everybody else. So we'll leave it at that. So they want to own you, and if possible, your children and grandchildren. So that's why you have to make a choice whether you want to continue to do what everybody is doing and get the results everybody is getting, or do what the billionaires do and get the results they are getting, even though they are very few in number. So someone once said that all greatness of character is dependent on individuality. So for those who may be sitting on the fence about this fractional billionaire project, some of the issues they may be grappling with include the fact that everybody is not doing this. What this person is saying is, if you want to be great, you actually need to do what everybody is not doing. You need to be an individual. You need to stand out from the crowd. The man who has no other existence than that which he partakes in common with all around him will never have any other than an existence of mediocrity. Even in the Bible, it says, enter through the narrow gate, for wide is the gate and broad is the road that leads to destruction, and many enter through it. But small is the gate and narrow the road that leads to life, and only a few find it. So if you add financial in front of destructions and financial in front of life, you get some sense of where we are going with that. This quote says, all experience has shown that mankind is more disposed to suffer, while evils are sufferable, bearable, than to make things right by abolishing the forms to which they are accustomed. So people will continue to do the thing they've always done, even though things are getting tougher, tighter, leaner, you know, because that's what they are used to. And this is Bernard Mandeville, 18th century philosopher. He said, we hardly have enough for people to do what is necessary to make us subsist. You see that us is in italics, meaning they subsist or live off what the poor people do. So they need to have more poor people so that they can be rich and enjoy. And the same Mandeville also said it would be easier where property was well secured to live without money than to live without poor. For who would do the work? And Lord Goderich also said, without a class of persons willing to work for wages, how are the comforts and refinement of civilized life to be procured? So in summary, the whole idea of what billionaires do is they take a lot from everybody else. So you have a choice. There's no sitting on the fence. Right now, you're already giving to them, whether you realize it or not. And in other presentations, we'll go into the details of how you are giving to them. But you can either continue to give to them or get involved in this member-owned private equity cooperative that would make it possible for you to do what the billionaires do and collect from other people so that your income will not be based on what you do, but will be based more on what other people do and you get off of what they do. So thanks for watching, and hopefully we'll catch up with you in subsequent presentations.